And I really wish the week hadn't played out this way. Dow plummeting 603 points, S&P plunging 1.77%, NASDAQ nosediving 1.59%. I mean, we wanted to focus on earnings, which have generally been pretty darn good. We hoped to take the temperature of the moment. We didn't realize the only temperature this market cares about is one that's well north of 98.6 degrees. Because right now, Wall Street only has eyes for the coronavirus. Unfortunately, we have no idea about the real state of this outbreak. The situation's too volatile, too dynamic. When investors can't figure out something like this, they head for the hills. That's exactly what happened today. And I expect more selling on Monday when we get the new epidemic figures. So why don't we just kick off this week's game plan with the one thing I am certain of, that the number of coronavirus victims will climb this very weekend. The only question is whether the pace of the infection's accelerating or decelerating. And despite efforts to control it around the globe, I think it's very much accelerating. I think we need to steel ourselves for a dramatic uptick in infections. And the Centers for Disease Control said we're facing an unprecedented public health threat, a set of fluid circumstances that makes investing in stocks feel pretty perilous right now. Now, we don't know when the authorities will get this thing under control. I'm not an immunologist or an epidemiologist. And you probably aren't either. Still, I'm expecting this panic to take down the stocks of companies that are genuinely immune to the disease. And that's what you want to be looking for if you want opportunity. But you can't have opportunity unless you have some cash. And if you haven't raised any cash, well, maybe it's still not too late. We've been raising cash, as I've been telling you, all week from my charitable trust, which you can follow on by joining the ActionAlertsPlus.com club. You know I've been negative. It's painful to be negative. It's right. We got a company reporting Monday that may be the true litmus test of this actual moment. Alphabet. Remember, that's the actual rubric for Google. Let's see. Alphabet's got the minor Chinese exposure. They don't need to worry about supply chain disruptions. That's something that we're very worried about for a lot of hard goods companies. And you can use their services at home, which is exactly what should keep working during this kind of outbreak. Alphabet's flirting with $1 trillion market capitalization. If the results are good, it might actually be worth buying on Tuesday, but only if we sense some stability or even, let's say, a decline in the fear factor. And that may be too much of a wild card to embrace. The term wild card you will hear multiple times in the show, because that's what I'm feeling. Monday night, we'll see who won Iowa, those caucuses. Be careful here, because I think we're dealing with a double-edged sword. If Bernie Sanders wins, the market could get hit, because Bernie's the anti-wealth candidate, and the stock market is wealth. However, I also suspect some investors will conclude that a Bernie candidacy will be easy pickings for President Trump. And they may actually bid up drug stocks and health insurers, which are the most visible point of contention, because they'll make a lot less money under single payer. That said, I'm increasingly feeling like trying to game an election right now is a sucker's bet. Too many wild cards. On Tuesday, we have two reports that could be polar opposites. We've got Clorox, which has continually missed its quarter but come down, not participated. Got a good yield. And we have Royal Caribbean. Clorox makes a product that kills everything. It's called bleach. Their wipes are among the best weapons against the coronavirus. Royal Caribbean, on the other hand, is the essence of travel. A cruise ship is the last place that many people want to be on during a major epidemic, because if anyone gets sick, the whole ship could be quarantined. Like that Carnival cruise off the coast of Italy, where 6,000 people were detained. Turns out there was no virus. But the fright remains. Now, what about the industrials? How are they going to be impacted? We need a classic industrial to find out we happen to have one. I'm talking about the straight-shooting Emerson Electric. Money managers flocked to the stock after we signed that Phase 1 trade deal with China because Emerson's got such extensive ties with the PRC. Now that China's exposure is a big problem, not an opportunity, how's demand? We're hearing a lot of negative stories about demand in China, obviously. How's the workforce in China? How's the supply chain? How's the global economy holding up? We're going to find out. After the close, one of my favorites since the show started reports, and it's Disney. And here's a classic case of sentiment change. Until the outbreak, we cared about one thing, the number of signups for Disney+. Now we care about how much lost theme park days there'll be. They've got one in China. And by the way, and how many customers will have, let's say, stay at home rather than go to the other parks around the world. Remember, the illness can be transferred by surface contact. So park attendance numbers could be pressured until we find out more about the illness. Wednesday, we hear from Merck. This will be a solid test of my thesis that the drug stocks can keep climbing here. I expect a strong quarter from Merck and more good news about its breakthrough cancer treatment, Keytruda. Like to see a big buyback. We get results from General Motors, too. And we want to know how their cars are holding up in China. Well, I got to tell you, I think the sales for that bellwether market are going to be very, very weak. There's a lot of value guys in that stock. I think it's going to be a value trap. Now, after the close, we need to hear the worst-case scenario for the Chinese economy. So why not dial up Yum China? The managers at the epicenter will most likely be grilled hard about whether anyone's going out at all. Hey, speaking of going out versus staying in, Grubhub reports. And we recently spent some quality time with the CEO. Hope you saw that interview where I got to examine their new technology to speed up takeout. How's delivery? Will people be more inspired to order in now that they're worried about this outbreak? Or is it too soon to be worrying about that? I don't know. CEO felt pretty confident, but the company's not for sale. He made that multiple times, that point. Thursday, we get results from another one of my favorites, and that's Bristol Myers. Expect to hear a lot more about the Celgene acquisition and maybe about some low-hanging fruit that Celgene might be harvesting now that it's run by Bristol Myers. I believe CEO Giovanni Caforio will be asked about the coronavirus. I bet she says she can't game it. Let's see what he has to say. If you want to know how China's really holding up, you need to listen to a CEO that spends more time there than just about any other CEO I know. And here I'm talking about Fabrizio Freda, the genius behind Estee Lauder. He's the CEO. Not long ago, we were worried that it might have too much exposure to Hong Kong because of the protests, the riots, and the traveling masses who go to the airport may not spend. Now, that's something a lot harder to do when protesters are fighting with police all over the city. But it turned out not to be a problem for Estee Lauder. Their China business was great. But given the coronavirus, I don't think it can stay great, or at least the future, the forecast may be cut. So how weak is Estee Lauder when they're selling tons of cosmetics into a do-not-touch market? I think this may be the most important stock and company to listen to because the CEO is so thoughtful. Finally, on Friday, we start the day with something that now seems almost quaint, but used to be very important. And that's the Labor Department's non-farm payroll report. If it weren't for the virus, we'd be laser focused on these numbers. We'd be looking for where Boeing 737 MAX issues might be hurting employment, or Amazon's unbelievable quarter came at the expense of hard good retailers, or, of course, whether raises went up too much and the Fed can't be as accommodative. Instead, the Federal Reserve just told us it's monitoring the economy for weakness from the coronavirus. So at least the government's got our back if things turn bad, at least financially. I know they're trying to do it with healthcare. One more. If we get through the week with endless down days and we're dramatically oversold, and I'm going to give you that figure about whether we are, then I've got one for you. It's AbbVie. Okay, AbbVie, I think, remember, they're buying Allergan. It's a big position for my travel trust. I know we're going to be telling ActionAlertsPlus.com members that this is where they should be. This is where they should pull the trigger. AbbVie's gobbling up Allergan at a very good price. We just got approved the only, I say we because I'm taking it, acute migraine pill currently available because I'm the spokesperson for the American Migraine Foundation, and these are migraine days. I think it can withstand even a ferocious amount of selling. Look, we were due for a sell-off anyway. I was worried about an exogenous event hitting us hard. I told you that over and over again. And this outbreak is as exogenous as it comes. But it's hard to model how much damage it should really be doing to the stock market. Let me give you the bottom line on this sobering day and afternoon. This is the kind of weekend where the big game takes a back seat to something you never heard of 3 weeks ago. The Wuhan coronavirus. Unfortunately, that's what we need to focus on until the authorities get things under control or the disease peaks. And right now, the situation is almost too fluid to project.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.